Hi all. Today we're looking at tax rates and the Laffer curve, and in particular, as our sort of case study, we have the $17 billion Apple paid, mostly in back taxes, to the Republic of Ireland last year in respect of corporation tax. And bear in mind that the rate that Apple is charged as to corporation tax in Ireland is 1%. Now, obviously, clients pay far more than that across the globe. And it's an interesting example of the Laffer curve in that, just to recap, the Laffer curve compares the total tax revenue with the marginal rate of tax. So, for example, if you were and Laffer curve is illustrated by corporation tax very, very, very well, because if you have a low marginal rate, you've got so much revenue, and you raise the rate, you've got more revenue, but there comes a point where the curve dips down and does a parabola down to zero. But you might think that is rather unlikely, but in the case of corporation tax, that is very competitive as between jurisdictions, and almost a perfect illustration where corporation tax applies. We need to think in terms of the total tax base. Clearly, the total tax base in this case is not Apple's sales and profits in Ireland as a result of intellectual property and transfer charges from one jurisdiction to another, ostensibly as a result of the intellectual property being sort of domiciled in Ireland. Global profits can basically be channeled towards Ireland because the costs are borne in the jurisdictions where the revenues are being earned. So it's an interesting point. To what extent, if we also think about our sort of economic man, versus the virtuous character. So the economic man of Adam Smith compared to the virtuous character seeking perfection, say, of Thomas Aquinas. What's this telling us? It's one thing it's telling us, we can contrast economic man and the virtuous character according to how much transparency there is, and transparency is an important element, because without transparency there is no evidence, and without evidence the court, in this case the European Court of Justice, hated of billionaires of course, has brought transparency to these global revenues and has resulted in a colossal tax payment, 17 billion in tax. I mean, it's extraordinary. And still very low when you compare that to Apple's global revenues and profits. Now, the UK can't complain too much because the UK used to be in a very privileged position as regards intellectual property, which of course was exploded by Brexit. And this case casts very interesting light in a way that politicians don't normally like light to be cast into the consequences of their sort of campaigns, win or lose. And Brexit clearly has benefited some people enormously and out of all proportion probably to their expectations. But it has, as ever, as with tariffs, affected the millions, evidently very significantly, in that Ireland now has, as regards these massive corporations, has the whip hand. It's now the port of entry to the European Union. Now, Ireland, for example, might say, well, actually, we got there because of our virtuous character. We were the team player. We were the ones who voted to remain in the EU, even though, the billionaires were piling on the dollars to campaigns, to politicians, to come up with a different result. We have earned this success, and I think there's some truth to that. I think there's some justice of that, in that the Irish public managed to maintain its rationality and was able to see its self-interest lay within Europe. In a way that the British public couldn't. If we look at the motivation involved, economic man has narrow self-interest. He's sort of profit maximizing. Whereas the virtuous character, Adam Smith's impartial spectator, is looking for sort of praiseworthy conduct, irrespective of external reward, and would see virtue as an end in itself, as opposed to the economic man, who would be rather more pragmatic and see matters in terms of counterparties, competitors, production, input, contracts. Not particularly bothered about the view of other people, because, in that lovely phrase, it's no one's business but their own. And this is what transparency brings to the table, because suddenly it's hard to tell whether it's somebody's business if there's a lack of transparency, because the impartial spectator is not in a position to judge. So what was sort of restraining the parties here? Internal governance. You would have to say that the Irish public, Irish politicians probably govern themselves better, faced with the sort of decisions that they made 10 years ago. this is not an area where external constraints like legal penalties, legal fees, contract enforcement costs and price mechanisms can really help. Again, virtuous action would abstain from deceit or breach of contract, even when detection and punishment was impossible. Whereas the economic man exploits advantages simply because not everything is known and not everything can be known. Quite often, commercial matters are pretty complex, and thinking of the law of property, the sort of underpinning of commercial activity, and in particular land law, the rights over a piece of land are vastly more complicated than the rights over say a laptop, and that creates an asymmetry. So when we come to think in terms of intellectual property, again we've got this, it's property, we've got this asymmetry. Now, you may say, now that the matter has been exposed and there's redress, you might say, well, it's a bit rich of Apple to be sort of having this architecture around intellectual property. After all, who developed the key technologies in, for example, mobile phones, the screens, the software, and so on, if not government? And in a sense, this is a public good. So when we come to the mechanisms, we can see that the institutions have been very robust despite the self-interest involved, and they've got to a result. This is the important thing, that there has to be a low friction, low cost transaction cost to all this, which is why the European jurisdiction is chosen, and it's worked very well. If we sort of step back, if we return to the economics of the thing and the Laffer curve, of course, when we look at VAT and corporate and payroll tax, in this case, Apple has 4,000 employees in Ireland doing one thing. It has 4,000 employees in Germany doing another thing. They all pay tax, and through their consumption and others' consumption, sort of VAT. So corporation tax is an area where the Laffer curve is of particular interest and particular help in terms of arriving at a good way of thinking about things and a decision. So we've talked a bit about the profit in relation to the employees. We've talked a bit about the profit concentration. I mean, in this case, Apple booked 25% of its global pre-tax profits through its Irish entities, despite Ireland hosting only 3% of its global workforce. And as we say, we have a little, if we pick out one country, we can do a bit of a comparison with Germany. So the EU transparency rules, this is obviously a bit of a triumph for them. The data comes from country by country reporting requirements designed to reveal where multinational companies book revenues, profits, and pay corporation taxes. And it's a wider trend. Other multinationals show similar patterns in Ireland and low tax jurisdictions. Microsoft, for example, booked 38% of global pre-tax profit in Ireland, which seems rather unlikely. Procter and Gamble, again, Luxembourg, it had one employee in Luxembourg and booked 115 million profit there and 0% tax. Now, as an economist, you're not sweating this too much because if the money isn't going into government hands, it's going into shareholders' hands or it's going into investment. So you're not sweating it too much. But even so, it is a triumph for transparency, and it helps throw also light onto our sort of contention that the invisible hand is sometimes it needs a little bit of help. So I hope that's helpful, and see you next time.